Get strong.
All right, we're going to do a little market review of 119.24 on the NASDAQ. So what I like to do is the night before, the morning, I kind of like to look at my daily time frame. I kind of had this fib mapped out already a couple days ago. Once we started to come back down, pulled my fib from this low here, the candle body, to this high here on the candle body. And you can see how price respected and kind of stayed right above on the 618 level. Came down to 706, but got rejected and came right back up. And once we shot up, I was looking for higher prices. So Thursday in a day, we're right at the top of this level here. So Friday, I was looking, if we break above this, I'm looking to shoot up to here. Because in the past, if you look at past fibs, this is a little bit bigger of a fib, but kind of same concept. This last little downward here, so this low to this high here. So our price came down, bounced off. Once it broke this line, it's pretty much a straight shot up. These are all daily candles, but you can see it's just up, all the way to this fib retracement here, which would be your first take profit level. And if you look at it on a weekly, it changes the fib a little bit, but you can see it's just pretty much one candle all the way straight up here. And you can see how we had this fair value gap over here that we kind of met resistance, came down to this weekly, bounced off of this bottom of this fair value gap, and then straight up. So going into Friday's day, I was already looking for higher prices based off of this smaller fib here. Looking for price to shoot up here, and then eventually I'm thinking maybe we take out this high here. Kind of lines up with this fib level here perfectly, so it gives you a nice confluence when that happens. I don't like to leave my fibs on for my smaller time frames, so I'll just take it off, but I already have, an idea where I want it to go. So after you look at your daily time frame, I like to drop down by 4 hour. Kind of see what happens. So this is still Thursday, so let's change this. So let's just go back till 6 o'clock about. And you can see kind of all night, Wednesday, Thursday into Friday, just straight up. So we're really bullish here. If we start to come back down, then you look for a retrace to maybe one of these fair value gaps. They're kind of small, so not really significant. Drop down to your 1 hour. You see you already broke a high here. And the price is just continuing up. Drop down in your 1 hour. Kind of same thing, just price is just aggressively going up. You have this little quick down candle here. You could look maybe to mark that out, or maybe a draw on liquidity if price did start to come down, or maybe this fair value gap here. Price likes to come and reprice into this fair value gap, where you see where a fair value gap price just shoots straight up. Price wasn't really traded too much here. It likes to come down, reprice, and then shoot back up. So if price did start to come down, I would look for it. Maybe bounce here if it did. Or you have this down close candle, which could support price. It could come here and then bounce off. But mostly I like to trade after I get my higher time frame analysis up. I like to trade on the 5 minutes. So I have my 5 minute time frame on one screen, and then I trade on the 1 minute. Usually, just depending on the day. So let's see, we're at 6 o'clock here, so let's go to, usually I come down and sit down about 9 o'clock in the morning. I'll come to my computer around 9, kind of look at the market overnight. You'd also like to mark out your previous day highs and previous day lows, but we're way above the previous day high and way far away from the previous day low, so didn't really focus on marking those out this time. I like to get my session, so this is your London session, this is your Asia session. I like to mark the lows here. So this is London's low because it's a nice draw on liquidity. Could be also a little support there. And then you also have your Asia's low. The highs were already taken for the day. You have your Asia's low here. So mark those off. And then this is where the market opened, which kind of acts like a support and resistance line. You'll notice some days where the price will hit here and bounce off, or go below, come back, hit it, and then drop. But we're kind of far away from it now, so, and we're looking for longs throughout the day. I like to use my RSI a little bit for divergences. I don't really focus on it too much. It kind of just gives me a little more confluence on if I think price is going to reverse. It kind of just gives me that little bit more of, okay, yeah, it's going to reverse now. So already off, starting, right before 9 o'clock here, you can already see you have a little divergence here. From this candle body here to here, here to here, sloping down. This is sloping up, so you have a little bearish divergence there. So I kind of think maybe price will head down. This is not the end all be all. Price could just shoot up from here if it wanted to. But if you're thinking price may retrace a little bit, or if you're bullish for the day and you're looking for a bullish divergence, it could give you an idea where price is gonna kind of reverse for that time period. But it's definitely not the end all be all. You don't trade off of divergences. They're not really 100%. So going into the market, see if prices want to come down low. Take these lows out here. We haven't really made it a low, a high, a low, a high. So we haven't made it a lower low yet. Let the time play out. We made a new low here, broke market structure. Now this is right before the 9:30 open here. You can see that price is aggressively going down. So you can suspect it already took these lows, and if it's still going down, you have this little fair value gap here that price could bounce off of. But I also see this one here. This one's here, and then if you pull a fib from this last low where price kind of came down before it started to run, you pull a fib from here to here. And so you have your 786 all here. So you have all this right. You have this fair value gap here. I love 5-minute fair value gaps. You have your Fibonacci, which has support here, and then you have your London's low, which is usually liquidity. New York sometimes likes to run London's liquidity, or a lot of times. So you can see price right before the open is just aggressively already going down. The next candle. Alright, so 9:30 opens, from 9:30 9:35 aggressively runs low and then retraces back up. So it took this liquidity here and then aggressively trades back up. So you can kind of see that line's already going to be support here. Go back. So kind of bounce right off of that, so we'll see what happens with price there. Also see this fair value gap here. Kind of just mark this out. Kind of see all the way across the board. Actually, there's a fair value gap here. There's all in this whole area. There's a bunch of this fair value gaps here. So kind of interesting line there. Something to look at. Kind of let your price play out. See what happens. Still using that support. Boom. Made a new high here, so we broke this high here. Have a little shift in market structure. Now you also have a divergence here, which isn't the end all be all, but you do have a sloping down. Oh, this is starting to slope up here. And we are looking for longs for the day. You can see how these candles came down, kind of make like this little scissor bottom here. Didn't make a new low. Your low's here. You got higher low here. So we didn't make a new low yet. So let's see what price does. See how it got to this line again and met kind of resistance here. But now you can see you didn't make a new low, but now you're making a new high. So you want to see these down close candles support price. You have this down close candle supporting price here actually. And even here, you have this down close candle supporting these bodies here. That's a bullish sign there. So you could have tried to enter off of this down close candle when price was respected here. You could have made an entry on the 5-minute time frame. You could have probably maybe got a better entry on the 1 minute, but if the 1 minute's too fast for it, you can use the 5. But you can see how these candles start to support each other here. Perfect bounce off of these levels here. It's shooting back up. Have a nice divergence. Price respecting these levels. Took this liquidity here, bouncing off this fair value gap, and now it's gone. Broke all these highs already. Come back down here. Now you can see price hit here and bounce right off. This is turning this fair value gap into support now. You see how it had resistance, broke above it, came back, tested as support, and that's probably going to run. You could have made an entry here, you could have made an entry here. Say we just buy 2 contracts here. I like to at least have 2 contracts, either if it's micro or minis, because say price starts to run, say you break this high is even from here to here, you know, it's 136 ticks. That's over 500 bucks just going to there. 500 bucks just for that little ride there. And then if you leave a contract running to see if prices go higher throughout the day, you can put your stop loss right above your entry and you don't lose any money. You might lose the 500 bucks from up here if it does come back and stop you out, but if it runs for the day like it's gonna today, you're gonna make a bunch of money. So I always kind of like to leave a runner. And if it doesn't, it doesn't. So let price play out here. So you can see again how these down close candles here, supporting price here. We'll have a little fair value gap here, supporting this price here, bouncing up. You just mark these out and see how price keeps supporting itself all the way up. Say you want to take one off, you just sell one. And now you just leave one. Say you put a stop loss here. I don't know if you can do it on here actually, but anyways, oh wait, here we go. So you just put a stop loss a little bit above. Now you just let it run for the rest of the day if that was your entry here. Play out. Because we're already targeting way higher prices on a daily time frame. See how price just starts to run, and when it runs, it runs. On days like today, when price starts to run like this, it just goes and it doesn't turn back. You have people trying to short this all day. Everyone tries to call a top. Well, I'm going to call a top here and short it and get all this coming back down, but sometimes it doesn't happen like that. But you can see again here, this down close candle, supporting price here, boom, gone. Up, 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 keeps going up, all these 5-minute candles, all day. I think this was where our daily fib was projected to hit. So I probably would have took off my contract there because that was my target for the day. Let's see. Yeah, so 7,425 about. Let's just mark that line out. Boom there, we'll mark it green. Take that fib off for now. Go back to our 5-minute. So yeah, that was my target for the day. That's where I would have took off my last contract, and that was $3,000 in one contract. You see price probably, I think price went up for the rest of the day. Sell one there. Would have made 5 grand on the day just with that move. All right. We hit our target there. Get rid of some of this stuff. Take a look at the 1 minute time frame. I kind of take a look at both all the time, but let's see if you got a better entry. So you have all your 930 price runs. Takes out London's low here, kind of just choppy chop here. Runs down one more time. You have this nice little value gap created here. You have a really strong divergence from here to here. This is sloping down while the RSI is sloping up. There's a strong divergence there. Price is going up. Has a little resistance. This fair value gap goes up, comes back down, uses this support. You could have took an entry here if you wanted to, a little ballsy entry, but you also had this little fair value gap here too. So you could have took an entry here when price was supported here, going up. And then the same thing, you're looking for a price to be supported. Last down close candle, price is supported there. You have this fair value gap here again. And just mark these out as you go. If you think price is going to still be bullish, come down here, hit this fair value gap, perfectly hit the 50%, bounced off, came back up, and then all day just continued up here. You have this little fair value gap here, which it did break under it a little bit here, but not too much. The price did break under here, but you had this little down closed candle that acted as support here. If you just marked out this little one, I kind of like to mark out the whole thing here. That kind of was used as support. Boom, bounced off, gone. Fair value gap here, and just continues. Fair value gap. Respects the 50% line, still very bullish all the way up. And then after that, price just starts to run for the rest of the day. And the same thing like the 5 minute. Once you start getting runs like this, these down close candles, let's see, these down close candles here, support and price there, this down close, support and price here, and just goes all the way up. So this one here, if I can get that support in there, and just continues all the way up. You have down close candles, support and price. You don't have to, there's no fair value gaps, it's just up, down close candle support, down close candle support, down close candle here, support, boom boom, down close candles acting as support, any of these here, down close candles acting as support, all the way up to our target here. Look how it perfectly hit that target, and then it got a little rejected and then kind of continued the rest of the day, but it hit that target perfectly before it slowed down. So that was I was looking at for that on Friday. Maybe next week, if we continue to go higher, maybe we retrace a little bit here and hang out in here, maybe retest this line and then shoot up here. I'm not sure. See what happens. We already hit that first take profit and we're already trading above it. So do we retrace a little bit and then shoot up, or do we just keep shooting up and just crush this? Just my thoughts on next coming weeks here for the NASDAQ.